Before we talk about how hot this was, just put this into context. Why is this specific issue important?
Yeah, well, LGFV, like you were saying, local government financing vehicles, they're another very important part of China's debt market, just like the property sector. And this is an area, tasked with funding infrastructure projects that rarely make returns enough to repay the debt, and they have to really rely on the debt binge to keep afloat. And this snowball into this $9 trillion US debt market. So, yeah, like with all of the financial trouble that China's already in, this is another kind of like ticking debt bomb that investors are watching and afraid that it will explode. So that's the context of why this matters.
And how hot was the demand in this one? And is this a rare case?
Yeah, so you were saying this is LGFV from one of China's most indebted cities, Tianjin. This is a city that has debt level 3 times its city income. And this particular bond that they priced yesterday, it was 1.5 billion yuan. And it received over 70 times of bids of the offering size, 70 times. And to put that into context, this is definitely very rare. Earlier this year, similar level of LGFVs from higher risk areas would price bonds, and they would receive bids bids to offer ratio, in the single digits. Okay. So, for example, the same issuer priced a bond just last Thursday, also similar size, 1 billion yuan, and it was only 1.2 times of orders that it received. So from 1.2 to 70 in less than a week, we're really seeing a huge jump in demand.
So high risk, high demand, counterintuitive, you might say. Does it mean investors are no longer worried about LGFV debt risks?
At least for now, I would say it seems they're pricing in that this group of borrowers will remain relatively safe. And that happens after Bloomberg News reported last Friday that Chinese government will allow provincial level governments to effectively go on a 1 trillion yuan program that will effectively bail out some of the weaker LGFVs to shift their debt burden to the provincial level. And that's why investors are pricing in this optimism. And of course, also Chinese authorities themselves have signaled that they will really tackle this issue. So China's top decision-making body, the Politburo, has said in July that they will use, a bunch of methods to try to tackle this issue. And for now, it seems investors are really enthusiastic. So, for example, the same issuer, this Tianjin LGFV, they're pricing another yuan bond today, and they've cut the lower end of their pricing range to 3.5% from 4%. To put that into perspective, so the same bond that we're talking about from yesterday, the coupon was 4.5%. So that's going to be a 1% cut if they do manage to price at the lower end. So, they're cutting refinancing costs, investors are pouring in. But I have to say we are noticing that these are bonds that have shorter maturity. So they range from like half a year to a year. And earlier last month, we also wrote an article that sort of calculated the average tenors issued by LGFVs, and the tenors are really now the shortest on record, about 2.5 years for the first half of this year. So that means that investors are worried about the longer term financing challenges.